Hey guys, welcome back. I hope you're doing great. So today in this video, I'm gonna talk about everything that you need to know about the Fibonacci series and Fibonacci retracement in trading. And also I'm gonna share with you the trading strategy about how you can use this natural phenomenon to take very low risk trades. So without any further ado, let's get started. So first of all, in order to learn the Fibonacci series or Fibonacci retracement, you need to understand how the Fibonacci series forms. And here you can see that there's the list of this whole numbers which start from 0 and go all the way upwards. So here is 0, 1, 2, 3, 4, 5, 6, 7, 8, 9. Now this is the list of whole numbers. Now if we look at this is the Fibonacci series, and in Fibonacci series the first two numbers are 0 and 1, and then after these two numbers every next number is formed by adding the previous two numbers. For example, if we add these two, then we get 1, and if we add 1 and 1, then we get 2. After that, if we add 1 and 2, we get 3, and then 3 plus 2 is 5, and 5 plus 3 is 8. So you can see that in Fibonacci series every next number is received or is obtained by adding the previous two numbers. For example, 5 plus 8 would be 13, and this is how the Fibonacci series is formed. So why is it important and why does this matter so much? And now I'm going to tell you about that. So if we take any two numbers, any two consecutive numbers in Fibonacci series, for example, if we take 13 and 21, or if we take 18 and 13, and we divide these numbers, for example, if we divide 8 by 13, then we would get 0.6153, and if we divide 13 by 21, even then we will get 0.619. So you see there's kind of pattern that we are getting, that is, by dividing any two consecutive numbers in Fibonacci series we are getting the same ratio, that is almost 0.61. So this is a natural phenomenon, and this phenomenon is observed in throughout the universe. Even though these numbers look random, very much random, but if you see their ratio, there is a pattern that we see, that is, we are getting the same number every time we are dividing two consecutive terms. So this is the beauty of Fibonacci retracement or Fibonacci series or Fibonacci ratio. And now in order to use this in trading, we use this ratio as a reference. There are multiple ratios in Fibonacci retracement that are used. For example, if I take the Fibonacci retracement tool and draw the Fibonacci from here to here, there are multiple levels that are important. For example, it starts from 0, then there's 0.236, 0.382, 0.5, and 0.618. In my trading, I mostly use these three levels. For example, this one, and this one. So 0.382, 0.5, and 0.618 as my primary tools whenever I'm working with Fibonacci retracement, because if the price respects these three levels and reacts at these three levels, then I take my trade. If it just goes through these, or if it doesn't even reach these, then I will not take those trades, as I'm going to show you next in my example. So for example, if we talk about the working of Fibonacci series or Fibonacci retracement in trading, then you can see that here we can see the formation of this swing. Okay, so it starts from here and it goes all the way here. Now this is an impulsive move, because in forex market doesn't always move in one direction. It is always moving either upward, downward, or in the ranging or sideways movement. So whenever the market gives an impulsive move in either bullish or bearish direction, the market will retrace back a little to give the correction. For example, you can see that the market is, let's say, moving in the bullish direction, so it cannot always continue to move in the bullish direction. It will have to reverse at some point, and during those movements you see that there is this impulsive move, then there's a retracement, impulsive move, retracement. So market cannot just move all the way suddenly in a straight line in the bullish direction. It will always be making these impulsive move, retracement, impulsive move, retracement. So these retracements are the ones that we want to capture before the start of the next impulsive move, and this can be done using the Fibonacci retracement tool. And this is an example for a bullish trend. Similar can be said about the bearish trend, in which the market moves in the bearish direction by giving an impulsive move, impulsive bearish trend and then a retracement and then again impulsive move, bearish move, and then retracement and then again bearish impulsive move. So this is how the market moves in the bearish direction, and this is how it moves in the bullish direction. Now if we look at this example that we were studying, you can see that there is an impulsive move in the bullish direction. Now as I said, market just cannot continue to move in a straight line or in continuous formation of bullish candles all the way along every time. So here you can see the market gave this bullish impulsive move here, okay, in this wave here, and then after that, after the formation of this impulsive move, you can see that there is a correction in the market or retracement in the market. And if we extend the Fibonacci retracement tool, as we can see here, this correction is till the level of 0.51. So you see, after giving this impulsive move, market came down till this level, and then after that it again started to move in the bullish direction. So the market is respecting this 0.5 level, and similar can be said here in this case when the market got reversed from 0.382. so if we are able to see any candlestick pattern or any pattern that can give us or tell us that there is going to be a bullish move, again bullish movement in the market at this level or this level, then we should be able to take that trade and capture that bullish trend or bullish movement in the market. For example, here we can see the formation of this bullish pin bar, and after that there is a very impulsive bullish move in the upward direction, and also here is the formation of a base rally supply zone. And you see that this bullish pin bar signals that the buyers are in very good momentum and they're taking the market in the bullish direction. So when the market was here and at the 0.5 level, we see the formation of this bullish pin bar and the market, and the retracement is at 0.5 level. So both these are adding up and we are able to capture this bullish move. So we can take a long position at the close of this candle, and we can put our stop loss at the just below the confirmation candle or just below the level at which the confirmation candle is forming. So this is how you can use this in order to take entries. You can decide your take profit by using the Fibonacci extensions, or you can also use any other strategy that you have in mind in order to decide your take profit. For example, if I draw from here to here, from where the market started to retrace, then we can see that there are Fibonacci extension after the 1. So we can use these Fibonacci extensions. For example, we can use this 1.618 level as our take profit, and if we take the entry here and put our stop loss here, as soon as the risk to our ratio of 1:1 is met, then we can close our position or we can break even that trade. For example, if we are putting our stop loss at this candle, okay, this low of this bullish pin bar, then we can wait for the market for 1:1 risk to ratio, and here we can break even our trade, and then after that we can target this 1.618 and 1.272 for partial profits. For example, you can close your position partially here and then close the rest when the market reaches this. So this is how you can trade using the Fibonacci retracement tool. I know it sounds pretty simple, but when you're working on the real-time charts, you will be facing a lot of difficulty in identifying the trend and identifying if the market is actually, where should you start drawing the Fibonacci retracement. For example, in case of this bearish move, let me just go ahead and delete this. So for example, in case of this bearish move, we can see that there is the formation of this bearish impulsive move here, and then after that there is retracement, and this retracement is respecting this 0.618 level. Okay, so we can extend this and see that market reached here, and then there is the formation of again this kind of pin bar in which there is very big rejection from the sellers. So the sellers are taking control during this phase because of this long wick, and we are able to identify that. So with the formation of this candlestick pattern, we can put our take entry at the close of this candle here, at the very next candle that forms after this pin bar, and then we can put our stop loss at the above this pin bar, and then we can target 1.61 and 1.272 as our take profit levels. For example, if I draw it from here to here, we can target these two levels, 1.272 as our take profit level, and also we can break even the trade as soon as the 1.1 to our ratio is met. So this is how you can trade using the Fibonacci retracement and Fibonacci extension tools. I hope you liked this video, and I hope you understood how the Fibonacci extension and Fibonacci retracement works. In order to stay updated, please make sure to subscribe the video, and if you have any questions, please comment down below. I would love to answer them. Don't forget to like, share, and subscribe. See you guys in the next video. Thank you.